Welcome to PlotLines, where we'll use our over 30 years of experience in real estate communications to uncover the real stories behind real estate. I'm Heather Crowell.
And I'm Brittany Acrivo. Dive in with us as we invite guests to break down the ever-changing landscapes of real estate together. Welcome back to PlotLines, a podcast all about rewriting headlines in the real estate industry. We're so thrilled to be joined today by Darell Handler, the COO at Handler Real Estate. Darell, thanks so much for joining us today.
Thanks for having me. Good to see you both.
Yeah, so fun fact, Darell actually helped broker Gregory FCA's New York City lease, so small world. But Darell, why don't you tell our guests more about yourself and your company?
Yeah, absolutely. Darell Handler from the Handler organization. We are a family business, owner-operator of office buildings throughout New York City. We own, lease, manage. We also have a full-service tenant rep brokerage business. That's how I was connected with Gregory FCA originally. We've been around almost 100 years and been doing this for a very long time.
Awesome. Okay, so, one of the reasons that we're here is to discuss some of the headlines that we're seeing, specifically around the New York office conversation in this case. So, we're gonna read a few headlines and get your thoughts on them. So, one of them is the worst is yet to come for New York City office. Manhattan's market is still heading to the bottom, albeit very slowly. And then the other is downtown Manhattan's office market can't catch a break. So, what are you seeing there? What are you hearing on the street?
It was very dramatic for those headlines. I think there's pockets of truth in that. There's buildings that are really hurt, and there's buildings that will have a very hard time coming back from this.
Right.
You get to a certain point, and when your vacancy is so high, there's no amount of money that you can get a return on by doing leasing.
Right.
And it costs money.
Right.
But at the same time, there's a tremendous amount of activity throughout the city from a leasing perspective. So the buildings that are still relevant and still actively transacting are having a lot of great velocity. In our portfolio alone, we've done a tremendous amount of leasing. We have very little amount of vacancy in the portfolio.
That's great.
But we've spent money at the right times, and we were lucky enough to keep a lot of tenants. Maybe fortunate or lucky, whatever. But I don't think that, when you hear the headline, the worst is yet to come, where my head goes to is from a debt perspective. It's good. It's not a favorable debt environment. It's given where interest rates are.
Right.
However, when you talk about office as an asset, being very challenged from a debt perspective.
Yeah.
That's where I hear the worst is yet to come. It's not because people are occupying buildings. It's not because people aren't leasing space. I just think you hear that, and my head goes to, it's going to be hard to refinance.
Right. Which is probably true across asset classes, maybe particularly so in the office space, but not a favorable environment. Yeah.
Would you say that New York City as a city is doing enough to bring people back, right? So the headlines, I think it was the start of the year, there seemed to be some optimism around required back to office work. What are you seeing there now?
Yeah, I would say in 2021, 22, 22, yes, but 21, no. There was no market for leasing. There was no one in the market, very few deals, and people were happy working from home. As things matured, there are companies that I am sure are working from home and will work from home forever.
Right.
But there's some that have said, "Hey, this doesn't work for us anymore." It was a good experience and experiment, but it's time to get back to the office. So, last year we had a record year in terms of leasing velocity and from a revenue perspective from the brokerage business.
Great.
And I believe that's because people want to be back in the office at some level, and two, there's a lot of really great deals out there. So it's a great time to be a tenant in the market to take advantage of what's going on. And if you liked the building in 2019 at X dollars a square foot, you're going to love it at X minus. There's a lot of people in the market looking to take advantage of the situation and get favorable lease terms.
Makes sense.
I think that you've seen a lot from January 1 on. we've seen a tremendous amount of interest in spaces that might have not had much interest before. So that can't be coincidence, in my opinion. You speak to other landlords nearby or other brokers who play in the same field as us, and they've seen the same thing since January. So I think you're seeing people who really want to be back, and companies that are really encouraging their employees to come back on some level. Mondays and Fridays aren't the same as they used to be.
Right.
But when you're riding the subway on a Tuesday morning, it's packed.
Yeah.
Sure.
So are you seeing like any specific trends, like specific industries or amenities, specific industries coming back to the office, or amenities driving, interest in particular buildings? Like, are there any, trends that you can speak to? And then I also want to get your take after that on the office to apartment conversion and the reality of that, and whether that's really possible.
Yeah. So as far as industries, financial services have been back for a long time.
Yeah.
That sector has done very well financially as well. So, that drove the market for a while. They were extremely active throughout the city. What the other trend I'm seeing is tech is still having a harder time coming back. They've been the most accommodating from work from home. And not to mention, they are, by nature, they are the most cutting edge and most, technical friendly. There's a lot
most
of
innovative.
For every tech business that's, on the forefront of everything, there's a lot of, normal conservative businesses that require physicality, that don't want to take all their meetings on Zoom, or, there's certain roles that really aren't conducive to being isolated at home. I can appreciate that there's some roles within an organization that don't necessarily need to take the commute to be in the city or be with each other. Like they don't have any value other than socially speaking, for being together, coding, things of that nature. But there's thousands of roles that require, in-person collaboration, and I would imagine really want to be each other. So from a trend perspective, those are the two big ones. I think, there's other industries, service industries and, nonprofits that are starting to have come back in a meaningful way.
Yeah.
As it relates to amenities, I think that you're definitely seeing a lot of buildings, keep up with the Joneses, so to speak. Conference centers, gyms, amenity centers. And I think it's cool. I mean, when you renting an apartment, you go into a nice new building, you see a fancy amenity center, you think to yourself like, oh, this is nice, I'm going to use it all the time. And then maybe you use it a couple times.
Right.
It gets you your door. It doesn't, I don't know how much it gets used. But you're definitely seeing that happen throughout more Class A and bigger buildings. Smaller buildings can't really afford to give up leasable space to dedicate towards space they're not getting money on.
Yeah.
So you're seeing that. I don't know how much it's really making a difference, but I do believe that if you want to be a competitive building and achieve the top of the market rents, you have to have that. So it's an interesting new thing in the industry, because before, really, maybe you got a shared conference room, and maybe you had like a place to have soft seating, but you never really had like true amenities.
Right. Yeah.
As it relates to the office to resi conversion question, it's an interesting one. Like it makes a lot of sense on paper in terms of city apartments. There's a lot of vacancy. Why not do this?
Affordable housing, all of that is needed, right? So it makes sense, but
but I think from a practical perspective, it's really, really hard, and I don't think you're going to see a ton of it.
Okay.
A couple of main factors is, one, the building has to physically, kind of lay out to do this.
Right.
If has a huge core, or it has a huge floor to core ratio, it becomes very challenging because of how far you are from the windows. That's one. You got to be able to buy these buildings really, really cheap to be able to afford to spend the money and make the
make the change.
Yeah, it costs a lot of money to do this. It's not, it's very capital intensive, and you're going to want to get the return on your money for the risk.
Right.
And then the last thing is you have to have a clear path to complete vacancy. So even if you had a 50% occupied building, you got to get the other 50% out.
Out there, yeah.
Then you could have leases for 7 years, 5 years. They might not want to take a buyout.
Right.
So those are like the main factors that you're seeing. All, you have to kind of have a perfect storm of the three of them. What's I think the most challenging is buying these buildings as cheap as possible to be able to pencil the deals.
Right.
One of the headlines you mentioned was like downtown can't catch a break. In downtown, in the financial district, ever since 9/11, it's been a really actually great story of reimagining these buildings
Sure.
Yeah.
in the financial district that have changed from office to resi and with a lot of success. And you're still seeing that today because it is easiest down there given the size of the buildings and the way they're built. A trend down there that's I think is super interesting is that I think there's something like 5 million square feet of office space currently that is being converted from office to resi.
Oh, wow.
In financial district.
Oh, wow. Yeah.
That reduces the denominator of how much space there is to lease down there, which helps, when you look at a vacancy rate and those tenants are going to be displaced and they're going to have to find.
That's right.
Yeah. So I think that's a good thing for the neighborhood.
And it could impact rents over the long run, right?
For sure.
Improve rents. Yeah. Okay.
It's still a great place to work. I mean, it has gotten
Of course.
hit the hardest out of all submarkets in Manhattan. However, it's an amazing place to work. I do a ton of business down there. The buildings are super cool. It's easy to get to. It's, the quality of life has only gotten better over the last 15, 20 years. So, I'm a big believer in it, but I think that helps long term when you displace 5 million square feet of office.
Sure. Yeah. So Darell, shifting gears a little bit, we want to talk a little bit about the Miami office market. That was buzzworthy for a little bit. New York office tenants moving to Wall Street South. Tell us a little bit about this phenomenon and what your thoughts are on it.
Yeah, it's been really interesting. I mean, it's Miami's a great place to live, work, and play. Great weather. It was open during COVID for the most part, and so people flock down there.
Right.
The funny thing about Miami is it's an extremely small office market as compared to New York City and other major markets.
Yeah.
I don't know the exact number, but I think it's like 10 to 20% of what New York City is in terms of the amount of square feet there.
Yeah, it makes sense.
So, like from a competitive standpoint, it's going to be hard to compete when it's just not in the same sort of world from that demographic. However, you see a lot of these blue chip names have moved down there. They've opened offices, they moved teams down there, they want to be down there. It's only made the neighborhood or the whole city a better place to live. They have challenges such as space challenges. They have school challenges in terms of keeping up with the people who want to move down there and put their kids into
interesting,
both public and private schools. They're gonna have to keep up with that. I overall believe in the Miami office market. We've done a lot of business down there since COVID, which has been very exciting, and we love working down there. However, I think that you're going to see that, even if everybody in the world wanted to move down there, there's not enough space to house them.
Right.
And you're already seeing a little bit of a slowdown from a leasing velocity there. It was super, super hot, and spaces were being competed on, multiple bids. But I think it's sort of maturing and becoming what it will be, which is going to be a very exciting office market with great product and new buildings coming on board. But I don't know if it can ever be in New York City unless it kind of 10x's the amount of square.
Fair enough.
I don't know if that's ever happened, but I think it's great for the office as an asset. I think it's great for the country, and super exciting for the city of Miami.
Yeah, for sure. Okay, so we want your help in rewriting the narrative, right?
Okay.
Because we do when we started off, it was very dramatic, the headlines that we were reading, right? And that we do see that quite a bit in our line of work. So give us your ideal headline about office space in New York City.
It's a great time to be a tenant in New York City. It's a great
short,
time.
Simple, to the
Fair
point.
enough. Yeah, no, that makes perfect sense. Okay.
Yeah. Darell, anything else that you want our listeners or Heather and I to know?
Yeah, well, if you ever need any help with your office lease in New York City, whether that's finding new space, renegotiating your current lease, want to move to one of our buildings in the portfolio, give me a call, reach out to us. We're extremely active. And like I said, it's never been a better time to be a tenant in the city.
Yeah.
Appreciate you guys having me. It was awesome seeing you both.
Yeah.
Awesome.
Very happy that you guys are doing this. It's super cool. And I look forward to seeing you guys soon.
Great.
Thanks,
Well, thank
Darell.
you so
Thanks for
much.
being with us.
Thank you.
All right.
This podcast is a production of Gregory FCA. If you enjoyed our discussion, please subscribe wherever you listen to podcasts